Hello and welcome to the Investing Insiders podcast, where we help you achieve financial well-being by making smarter money decisions. I'm Brianne, and in today's episode, we're going to be looking at some simple tips that you can use for tax to help make sure you keep your finances on track and are being as tax efficient as you can with your finances. It's one of those things that affects everyone and can get a little complicated. So hopefully the tips that we go through in today's episode will help make sure you can understand the different ways to maximize the income that you have coming in and make sure that your finances are on the right track too. The tax rates, allowances, and some of the reliefs that we mentioned in this episode are based on rules that are in place as of the 6th of April 2026, and they're subject to change. Let's get into the episode. This episode is sponsored by Saxo Markets. First simple tax tip to keep in mind is that it's important to check your tax code. So your tax code is used to let you know how much tax is taken out of your salary each month. And checking that you have the right code can make sure that you're paying the right level of tax. You can find your tax code on your payslip. If it's not clear, get in touch with your HR department or your manager, and they'll be able to direct you to the right place to find it. Another way that you can find your tax code is by logging into your HMRC account online via the app. You can also get in touch with them over the phone or by post as well, if that's more accessible. Around 5.6 million people overpaid tax in the 2023 to 2024 financial year, according to the latest HMRC figures. That's huge. The tax overpayment was also around £3.5 billion as well. So it's definitely worth checking. If your tax code is wrong, you can let HMRC know. And it's important to make sure they have all the up-to-date information about your employment history and all of the ways that you might be earning income. Even if it's something like selling items online, if you have rental income coming in, there's lots of different ways that you could be making and earning outside of your, monthly regular income that comes from your employer. Making sure all of that is accounted for helps ensure that you're on the right tax code and everything is aligned in that way. If you think that you've been paying too much tax, you can submit your tax form online. Using the up-to-date information, HMRC can then get back to you as to whether you are owed a tax refund or if you're on the right tax code, letting you know, and also letting you know if you're not paying enough tax as well. It's always worth checking to make sure you're paying the right amount of tax. The next simple tax tip to try is maximizing your ISA allowances. An ISA is an individual savings account, and they are a great tool for tax efficient saving or investing. For adults over the age of 18, the ISA allowance is £20,000. This allowance can be split across the different types of ISA accounts available. Cash ISAs are used for savings. Stocks and shares ISAs are for buying, selling, and holding investments. There's also the lifetime ISA, which you can use for purchasing your first property or retirement. And there's innovative finance ISAs also. With your allowance, you can split it across the different ISA accounts. Some rules are coming in next year, which are going to change what you can save in each one. For cash ISAs, the limit will go down to £12,000 for under 65s from April in 2027. But keeping everything in mind, making sure that you maximize those allowances and use them to your benefit can help you retain much more of the growth that you might get from your savings or investments held within those accounts. For people under the age of 18, a junior ISA can be used for saving or investing. The allowance there is £9,000, and maximizing this can also help make sure that the growth that's experienced from the money in those accounts is there and can be maximized and maintained as well. The next tip is to check for tax-free allowances. These are tools that you can use within the tax system to make sure that you are using your money efficiently and retaining as much income as you can. If you're married or within a civil partnership, you can utilize the marriage allowance, which allows one person to transfer £1,260 of their unused personal allowance to their spouse or civil partner. For investors, looking at things like the dividend allowance or the capital gains tax allowance allows you to plan your investments, the returns you make strategically to try and retain as much of the growth that you might experience on those investments too. These allowances only apply to investments that are held outside of tax efficient accounts like a stocks and shares ISA. This episode of the Investing Insiders podcast is sponsored by Saxo Markets. Saxo provides access to a broad range of global assets through a sophisticated trading platform. You can trade US stocks from as little as $1 per trade and UK stocks from $3 per trade. Please remember that all investing involves risk. The value of your investments can go down as well as up, and you could get back less than you invest. Terms and conditions apply. Visit Saxo Markets to learn more. The next tip to consider is maximizing your pension contributions. Pensions are tax efficient accounts which allow you to contribute up to your allowance, which for most people is around £60,000. It may differ depending on your income during your working life. You can use your pension contributions to ensure that if potentially your earnings are going to take you into a higher tax bracket, you can put money into your pension to keep your earnings lower and reduce the amount of income tax, say, that you might need to pay in a single year. One of the things to really think about when it comes to this is the fact that once you put money into a pension, it's locked up until you reach pension age. So that's one of the things to bear in mind when considering boosting your pension contributions. But it's definitely something to think about, and it could have a significant impact on the taxes that you might be liable to pay. If you're self-employed, thinking about taxable deductions and making the most of those is very important as well. There are certain allowable expenses that exist under UK tax rules that can help you cut the cost of your taxable income. To qualify, these costs have to be for business purposes only. It's not something that you can deduct for your own personal expenses. So thinking about things like the mileage allowance, which applies to people that use their vehicles for work. Other things that you might be able to claim tax back for include travel for business purposes, going to meetings, conferences, laptops, computers and equipment specifically for business use, phone bills, broadband. There's quite a lot in that mix. So it's worth checking what allowances might apply to your business and making the most of those when it comes to submitting your tax return too. For anything that you're planning to claim back, thinking about having receipts, making sure that you keep up-to-date records is really important. Finally, it's really important to consider financial advice or speaking with a tax specialist. Tax rules can be incredibly complex. So if you're finding it challenging to get your head around certain things, you're certainly not alone. What's important, though, is to make sure that you speak to somebody that can guide you through your specific circumstances and make sure that you are staying in compliance with HMRC's rules and paying the right amount of tax based on your situation. A tax specialist or financial advisor can sit down, look at your circumstances, look at your income, look at your expenses, factor in your wider financial goals too, and help you be incredibly strategic about how you make the most of your tax allowances, tax reliefs, and let you know about things that might be specific to your financial situation that you might not have thought about or didn't consider previously. Thank you so much for joining our Investing Insiders podcast. If you like the episode, please subscribe and leave us a 5-star review on your platform of choice. For the latest money news and deals, you can sign up to our weekly newsletter at investinginsiders.co.uk/newsletter-page. We've also got a suite of guides, tools, and calculators on our website at investinginsiders.co.uk. You can also keep up to date with us on TikTok, Instagram, and YouTube. Thanks for joining us, and we'll catch you in the next episode.